Something big just happened, and most people don't realize what it truly means yet. While the world was distracted by noise, a quiet but powerful move reshaped the future of one of America's fastest rising business districts. This wasn't speculation. This wasn't hype. This was a conviction expressed in nine figures. When $180 million moves with precision, it's not chasing opportunity, it's defining it. Stay with me, because what happened in Wynwood today is a signal, and those who understand it early are the ones who stay ahead. What we are witnessing in Wynwood is not a coincidence, and it is certainly not luck. It is the result of years of disciplined capital allocation meeting a neighborhood that finally reached its inflection point. A $180 million acquisition for a modern office building in this district sends a very clear signal. Wynwood is no longer an experiment, it is an established market with real gravity. This is a place that has transitioned from warehouses and murals into a fully functioning business ecosystem, and markets reward that kind of transformation when it proves durable. For a long time, people underestimated Wynwood because they viewed it through the lens of its past. Smart capital does not do that. Smart capital looks forward. It studies population inflows, talent migration, lifestyle preferences, and the willingness of companies to follow their people. Wynwood checks those boxes decisively. It offers walkability, culture, energy, and proximity to Miami's core financial districts, without the congestion and rigidity that older office corridors carry with them. When companies decide where to plant long-term roots, those factors matter as much as spreadsheets. This particular acquisition reflects confidence in the quality of the asset and the depth of tenant demand. A building of this scale and price does not trade hands unless there is conviction behind it. The tenants already inside represent a powerful mix of creative, professional, and emerging industries. That diversity is not accidental. It insulates the property from sector-specific downturns and anchors it to broader economic momentum. When global brands commit to space in a neighborhood, they are effectively underwriting its future. From an investment standpoint, this is about more than square footage. It is about positioning capital where growth is organic, not forced. Wynwood's rise has been market-driven. Artists arrived first, then entrepreneurs, then serious employers. Office demand followed lifestyle, not the other way around. That sequencing is critical because it creates authenticity, and authenticity sustains value even when economic cycles turn less forgiving. Miami itself plays a central role in this story. The city has emerged as a serious alternative for businesses and talent seeking flexibility, favorable tax structures, and a global gateway that connects North America, Latin America, and Europe. Wynwood sits at the intersection of those dynamics. Investing here is not a bet on hype. It is a bet on continued migration, continued innovation, and continued demand for environments that attract high-performing teams. Large acquisitions like this are statements. They tell the market that institutional quality capital sees longevity here. They tell tenants that this is a place worth committing to for the long run. And they tell the broader real estate community that Wynwood has graduated from next big thing to present reality. When capital moves at this scale, it does not chase headlines. It follows fundamentals. At its core, this deal reflects a simple philosophy. Identify locations where culture, talent, and capital converge, and invest before complacency sets in. Wynwood has crossed that threshold. The price reflects confidence, but the opportunity lies in what comes next. Markets are shaped by those willing to recognize transformation early, and this acquisition is a clear example of that principle in action. This transaction is a reminder that the most durable outcomes in real estate and in capital markets more broadly are rarely achieved alone. Scale, precision, and long-term value are built through partnerships that combine complementary strengths. In this case, the alignment between institutional capital and deeply rooted local expertise is not a convenience, it is the strategy. When those two forces move together, risk is reduced, execution improves, and conviction becomes actionable. Local knowledge matters more than people like to admit. Markets are not just data points, they are living systems shaped by zoning decisions, community sentiment, political nuance, and development history. A partner who understands how a neighborhood breathes, who knows where it has been and where it is realistically going, brings an advantage that no spreadsheet can fully capture. That insight informs everything from tenant selection to long-term positioning, and it becomes especially critical in a district evolving as rapidly as Wynwood. At the same time, local expertise without disciplined capital can only go so far. Large-scale projects require balance sheet strength, patience, and the ability to withstand market volatility without being forced into short-term decisions. Capital must be structured with intent, not just to acquire, but to support the asset through multiple phases of its life cycle. When capital is confident and aligned, it allows operators to think in decades rather than quarters. This partnership reflects a clear division of roles, which is often where successful collaborations either succeed or fail. One side focuses on stewardship of the asset, operations, tenant relationships, and integration into the neighborhood fabric. The other side focuses on capital deployment, governance, and long-term value creation. There is no overlap driven by ego and no ambiguity driven by control. That clarity is what allows both sides to operate at their highest level. Importantly, this is not a speculative partnership chasing a trend. It is a deliberate alignment formed around a shared view of Wynwood's trajectory. Both sides are expressing confidence not only in the building itself, but in the neighborhood's capacity to attract and retain world-class tenants. That shared conviction matters because when markets tighten or sentiment shifts, alignment keeps decision-making rational rather than reactive. Strong partnerships also send signals to the broader market. Tenants notice when ownership is stable, professional, and well-capitalized. Lenders notice when execution risk is mitigated by experienced operators. Competing investors notice when deals are structured thoughtfully rather than aggressively. These signals compound over time, strengthening the asset's position even beyond its physical characteristics. There is also an element of humility embedded in partnerships like this. No single participant claims to have all the answers. Instead, each acknowledges where the other brings superior insight or capability. That mindset is increasingly rare, but it is precisely what allows complex projects to succeed in competitive environments. Ultimately, this deal demonstrates a principle that extends far beyond Wynwood. Capital performs best when it respects expertise, and expertise scales best when it is supported by disciplined capital. Partnerships built on that foundation are not transactional, they are strategic. And in markets defined by rapid change, those are the partnerships that endure, adapt, and create lasting value. What ultimately validates an investment thesis is not the headline price or the architecture of the building. It is the caliber of the companies willing to commit their people, their brands, and their futures to that space. Tenants are the market's most honest signal. They vote with long-term leases, with capital, and with trust. When globally recognized firms choose to anchor themselves in a building, are making a statement that goes far beyond square footage. The presence of established high-profile tenants reflects confidence in three things at once: the asset, the neighborhood, and the city. These are organizations with choices. They evaluate risk meticulously. They assess talent access, infrastructure, lifestyle alignment, and brand perception. When they select a location like Wynwood, they are not chasing novelty. They are positioning themselves where their workforce wants to be and where their business can grow without friction. This tenant mix matters because it creates stability. A diversified roster spanning professional services, creative industries, and emerging sectors reduces concentration risk. It ensures that the building's performance is not tied to the fate of a single industry cycle. In an environment where volatility is the norm, resilience is built through thoughtful composition, not chance. Strong tenants reinforce each other, elevating the entire ecosystem within the building. There is also a powerful signaling effect at play. Once respected global names establish a presence, others follow. Talent follows, service providers follow, capital follows. That momentum compounds. Wynwood's evolution into a legitimate office destination has been accelerated precisely because credible tenants moved early and stayed committed. Their presence converts perception into reality. From a landlord's perspective, tenants of this caliber elevate the asset its LF. They demand higher standards in operations, amenities, and management, which ultimately enhances long-term value. These companies are not looking for temporary space. They are building culture, teams, and identity. That aligns perfectly with an ownership philosophy centered on durability rather than turnover. This dynamic also reinforces the broader narrative of how work has changed. Companies are no longer willing to separate productivity from quality of life. They want environments that inspire creativity, collaboration, and retention. Wynwood offers that blend: energy without chaos, culture without compromise. Tenants recognize that, and their leasing decisions reflect it. Importantly, these commitments are not made lightly. Large firms conduct exhaustive due diligence before entering a market. They analyze migration trends, economic policy, local governance, and long-term urban planning. Their willingness to commit here suggests a shared belief that Wynwood's growth is not temporary, and that Miami's role as a global business hub is strengthening, not peaking. When you step back, the real story is not the names on the tenant directory. It is what those names represent: confidence, foresight, and alignment with a forward-looking vision of work and city life. Strong tenants transform buildings into institutions. They turn neighborhoods into destinations, and they validate the strategic decisions made long before the spotlight arrived. In the end, buildings do know create value on their own. People and companies do. When the right tenants choose a place, they don't just occupy space, they define its future. Wynwood's ascent is a case study in how real markets are built. Not through shortcuts, but through layers of organic growth that compound over time. What began as a cultural experiment has matured into a commercial ecosystem, and that evolution is precisely what long-term capital looks for. Markets that endure are those where creativity arrives first, opportunity follows, and institutional commitment comes last. Wynwood followed that sequence with remarkable consistency. For years, the neighborhood's value was misunderstood because it did not fit traditional commercial templates. It wasn't polished, it wasn't predictable, and it wasn't designed for spreadsheets, but it was alive. Artists transformed empty walls into identity. Entrepreneurs turned foot traffic into commerce. Cafes, galleries, and studios created a gravitational pull that could not be replicated through planning alone. That energy laid the foundation for everything that followed. As the district matured, companies began to recognize something critical. Talent wanted to be here. In a labor market defined by choice, employers go where their people thrive. Wynwood offered an environment that felt human: walkable streets, authentic culture, and a sense of place that cannot be manufactured. Office demand emerged naturally, driven by lifestyle alignment rather than incentives or mandates. That is the kind of demand that lasts. What makes Wynwood particularly compelling today is that the data now supports what intuition suggested years ago. Office rents have climbed to the top tier of the Miami market. Vacancy has tightened relative to supply. Employers are committing to longer lease terms. These are not speculative signals, they are confirmations. The neighborhood has crossed the threshold from promising to proven. This rise is also inseparable from Miami's broader transformation. The city has positioned itself as a magnet for capital, innovation, and global connectivity. Policy decisions, tax structures, and infrastructure investment have aligned with demographic shifts favoring flexibility and mobility. Wynwood benefits directly from that momentum while maintaining a distinct identity that differentiates it from more conventional business districts. Crucially, Wynwood has avoided the trap of overdevelopment that derails many emerging markets. Growth has been measured. Supply has not dramatically outpaced demand. That balance preserves pricing power and supports long-term stability. When capital flows into markets that respect this equilibrium, returns are driven by fundamentals rather than financial engineering. There is also a resilience embedded in Wynwood's diversity. It is not reliant on a single industry or demographic. Creative firms, professional services, technology, and finance coexist here. That mix buffers the neighbor OOD against economic shocks and ensures relevance across cycles. Markets with multiple engines outperform those dependent on one. At its core, Wynwood's story is about authenticity, scaling responsibly. It demonstrates that when culture and commerce evolve together, value creation becomes sustainable rather than extractive. Investors who recognize that dynamic early are not chasing trends. They are aligning with inevitability. The lesson is simple but often ignored. The best markets are not forced into existence, they earn their status. Wynwood has done exactly that. Its rise reflects patience, participation, and belief, and those are the qualities that define enduring opportunity. This moment is best understood not as a single transaction, but as part of a much larger, deliberate pattern. Serious capital does not move randomly, and it does not arrive without a thesis. When investments begin to cluster around a city, a neighborhood, and a long-term vision, it signals confidence rooted in analysis, not enthusiasm. What we are seeing is the steady construction of a footprint designed to endure across cycles. Miami has reached a stage where its momentum is no longer questioned. It is measured. Population inflows, business relocations, and capital formation have converged to reposition the city on the global economic map. This is not a short-term surge driven by novelty. It is a structural shift powered by policy, geography, and lifestyle alignment. Investing here reflect an understanding that cities evolve when opportunity and quality of life reinforce one another. Within that framework, Wynwood plays a very specific role. It represents the next generation of business districts, places that blend productivity with identity. Capital deployed here is not seeking anonymity, it is seeking relevance. It is an acknowledgement that the future of work will favor environments that attract creativity, foster collaboration, and retain top-tier talent without sacrificing efficiency. This acquisition fits alongside earlier strategic moves across the city, land purchases, development commitments, and long-range planning that emphasize permanence over speculation. Each decision builds upon the last, reinforcing a presence that is intentional rather than opportunistic. When capital commits at this level, it is preparing for growth, but it is also preparing for downturns. That dual readiness defines disciplined investing. What distinguishes this approach is patience. Value is not extracted through rapid turnover or aggressive leverage. It is cultivated through stewardship, alignment, and the willingness to let strong markets mature. In an era where speed is often mistaken for intelligence, restraint becomes a competitive advantage. The goal is not to win headlines, but to own assets that matter 10 and 20 years from now. There is also a broader signal being sent to the market. Large, visible commitments communicate belief to tenants, to partners, and to the city itself. They encourage other investors to think longer term. They elevate standards. They help shape urban outcomes by rewarding thoughtful development rather than short-lived experimentation. This philosophy extends beyond real estate. It reflects a worldview that favors fundamentals over fashion. Markets move, cycles turn, and narratives shift, but assets anchored in strong locations, supported by capable partners, and aligned with demographic reality continue to perform. The discipline lies in recognizing those opportunities early and committing with conviction. Ultimately, the true measure of an investment is not how it performs in ideal conditions, but how it withstands changes in conditions. Miami's evolution and Wynwood's role within it suggest durability. Capital placed with that understanding is not a bet on the future. It is an investment in it. And here's the real takeaway. This wasn't just a building that changed hands. It was a statement about where power, talent, and capital are heading next. While some wait for certainty, others create it. While some follow trends, others set them. Wynwood is no longer arriving, it has arrived, and the next chapter is already being written. The only question left is simple. Will you recognize the signal, or will you read about it after the opportunity is past?